Good morning. It's Harvey Jackson. Happy New Year, and let's get right at it here. Trudeau is expected to resign. The best news I've heard so far this year, and it's maybe giving us some lift to the Canadian dollar. And we'll also go through some of the positions that suggestions for producer profits got on there as well on the Futures Focus report. Justin expected to announce resignation as early as Monday. This reporter actually called it like a funeral rites, but the problem with it being losing a leader doesn't mean that the election is going to happen right away. I hope it will, but the Governor General is a Liberal, and she may allow for the whole who's going to be the leader with the Liberals before they call an election, and that could be up to 90 days just by itself if they were to go through that whole process. So we'll see. Palm oil is still slipping, trying to find some demand. And the problem with palm oil having lost some of the demand is they're the most expensive oil, and it's kind of like the total flip of what's normal that happens. Palm was usually the cheapest, and then soybean oil, and then canola. And if the sources are right that I have, it's the exact opposite. Palm is the most expensive, canola is the next, and then soybean oil is after that as far as so it's just a real mishmash here. So good news for this is actually this mandatory, but there's some signing that needs to be done to get all of this 35 inclusion rate to 40, with expectation that they're going to get to B50 even later on for this upcoming year. Here's a story that I found interesting, and as of today, it doesn't have any impact on the market. But this is the kind of thing that happens in India when the inflation is actually pushing up the prices, relatively tight supplies, and they did this with peas, where they ended up importing because the cost was just too high. So we'll see if this can actually maybe move up the market, especially if India becomes a importer. They do grow enough for themselves, but if they're an importer, that will change some things as well in the market. They are a very populous country. It's going to need a lot. They're going to need a lot of product. More tension in France as farmers are pushing for their going to the French government and pushing on some of these trade agreements that they've got in place. All farmers across the world are having some issues making money this year for sure. So here's our canola position, 603. 630 is kind of like if we break through, we will get to 660. So hold on to those positions going into 660, especially if we get to 630. If you want to take them off at 630, that's fine, but we're not there yet. So here's the chart, and here's your vessel kind of lineup that's already taken. There's still adjustments on this, of course, as well, but you can see that there's from July on, there's a lot of purple in there, which is your China, and you can see lots of colors, other colors coming in, and those are all the European countries that are starting to buy this cheap Canadian canola, which is the cheapest oil on the planet. And again, so a few of the stories here, you've got local crush data at just shy of 5 million metric tons. Export data is still going through pretty strong as well. So you got exports at 3.2, crush at 4.8. So you've got a huge amount of product that's leaving or getting processed and leaving Canada. Here's your red spring. Your position is down here. It's a long futures position. Myself, I'm kind of neither or. I'm because of this whole here, the dormancy, and there's really no story driving this market up yet. I want to participate in it, but every time things have looked like positive, it ends up with getting muted. Here's your soybean setup. It's enter shorts at 995 and exit at 905, and with a stop loss at 1010. So keep that in mind. Here's your corn. It's the December 10th is at a 1 cent loss, and your October is at a 19-cent loss right now, but it's getting close to potential. If we get to 460, if the market does trade up there, that'll knock that one out, and it would knock out this one as well. Canadian dollar. I think this is a trade that we need to get in, and it came out just last week. Suggestion to go long. Now that this Trudeau is leaving, I expect to see this kind of increase here imminent. Let's have a look at the oil seeds here. Canola kind of trading in this range here. So needs to break out of this the funk that we're in and get above that 100-day moving average. Here's next November's canola. Still looking for targets up in this range here. You have to probably rally another $40 on the far out months, and that might take a lot of lifting on the front as well to get you there. February rapeseed trading right around the 515, and you can see that it's in this channel, and it's got pretty good wave analysis here as well. Here's the differential pricing. It's $140 difference from Canadian canola. So Canadian canola is $140 cheaper than European rapeseed on the front months. Soybean oil, it's just basically going straight sideways here for the last month. So well, I guess not the whole full month, but the last half of the month, it's been basically trading on at or the 40 cents a pound. Palm oil, it's taking these slides in here, so it's actually pulling back. I expect it will find some demand, especially if some of those refiners in Indonesia get their signatures done to add more of their oil into their own diesel program. Crude oil is actually taking a pretty strong little leg here, just recently as well. Soybeans, it's trying to peek its head above that $10 mark. I don't expect to hold a whole lot of strength, but some of the strength is coming from the news of the Argentina weather. It's their spring. Dry is in spring is usually a good thing, not a bad thing, but it's also the market is actually pricing in as if that's bad. I would expect if the weather turns anytime in the next 2 weeks or 3 weeks or probably even a month, the Argentina crop could be pretty darn decent, and Brazil still looks like a big crop. Soybean meal had a pretty good increase, pulled back pretty hard as of today. We'll see if that continues. So here's a longer 9-month look at the Canadian dollar, and you can see that there's a nice long candle on there. And look at that. There's your Trump or your Trudeau resigning with the expectation that you're going to end up with a new government that's actually going to be more fiscally sound. Wheat, I don't like this story at all, but it keeps on breaking. Now it's breaking down lower again. Lower lows getting made here. So still looking for some higher ranges for where we would make that next sale for new crop. Here's your Kansas City wheat. It's still getting some support from previous lows where the Minneapolis broke through. This one did not. And neither the Chicago, I guess this should be slightly lower, but it's basically looking like it's trying to hold some support there as well. Milling wheat in France looks like you've got more of an upward channel than a downward channel or sideways that we're getting in the domestic markets here in North America. Corn, just teetering to try to get to the 460, pulled back, another green day again. I would expect the report that we're going to see right here will maybe give us some news of acres and all that kind of stuff for winter wheat and your crop production for your corn and soybeans in the U.S. and world. So that's all I have for you today. Take care.